Good afternoon. This is Andy Petraza with Special Effects Academy on the start of the week session for March 3rd of 2019. We're going to be looking at the week that just ended and the week ahead. As usual, we will go through our standard agenda. I'll look at the prior week, our currency strength meter for the last 30 days, as well as the past 7. Any fundamental announcements scheduled for the week, an analysis of the major pairs, any setups we see in progress, and a few words in conclusion. On the long-term trades, of course, we've had a complete shift in direction from the British pound, which did take us out of a few trades we were short on with a loss last week. But we do have trades in the opposite direction, both on the pound and on other pairs that are carrying significant levels of profit at this time. A little bit of a retrace on Friday, not a very dire one, but the normal Friday retrace had a slightly negative as the week closed in open trades, but the weekly open now, market's been open for about an hour, has all the trades again moving in our direction. So it looks like the general direction hasn't shifted much since the week before. The pound is still definitely bullish. The CAD had a few ups and downs as oil price itself went up and down. But in general, the trend in oil is also remains bullish, as should the CAD. And the only one we're trading into CAD weakness, if you will, and for the long term, is the pound CAD, simply because the pound seems to be gaining strength at a faster pace than the Canadian. So we do have an open pound CAD trade right now that is actually in profit as the week begins. Short-term trading, the short-term ledger, we had 5 trades open for the week, and we ended up almost perfectly flat, a loss of 2.5 pips for the week as the week went back and forth. So there is a lot of volatility in the market, which isn't conducive to short-term gains per se, as the market goes into very choppy periods. However, we did have 2 winning trades, which pretty much outdid all the losses, barring, as I said, 2.5 pips. So that's where we are, a very flat week on the short term, and we ended the week completely cashed out as all trades were closed by end of market on Friday. Notes and opportunities for improvement. As mentioned, a very flat week on the short term, so nothing much happened there. There's been lots of good movement on the long term, and as I said, looking at the long-term account, a little bit down with the Friday retrace, which is normal, and actually the market opened put us back into where we were prior to Friday's normal, I guess, backwardian tendencies. So new week, we'll be seeing if direction will sustain itself, and we are entering the week. We continue to be bullish on both the pound and the CAD, and trades carried on the open trades carried on the short-term account, none. We did end the week all cash. Relative strength meter for the past 30 days, volatility has gone up through the roof thanks to last week's market movement. As I said, it was a very choppy week. We were carrying a volatility of 3 and something percent for the last 30 days. It went up a full 2 percentage points, and that was mainly because of last week, where the week exceeded the monthly volatility. So we had a week that had 5.41% volatility. Apologies. Oh no, actually, yeah, that is the correct date. No, it isn't. So this should have been the week ending March 1st. I'm sorry. So that date did not get updated. So week ending March 1st, we had 5.41% volatility. We can see that silver was the clear loser, dropping against everybody, with gold not too far behind. On the currency markets, the Aussie was very sideways. The Canadian did lose ground on Friday, thanks to oil doing a very sharp retrace just before the market closed. Swiss was one of the winners, gaining ground except all but two of the currencies. Euro gaining ground as well against everybody except the pound. The pound, the clear winner, as the Brexit fears took a rear seat. And it's looking more and more as if Brexit just isn't going to happen. And if it does happen, it's going to happen somewhere around 2 years from now. So the pound got noticeably stronger throughout, and all things taken into account and everything that could possibly happen, we still have the Brexit deadline of March 29th. That has not been canceled, but everybody is thinking that it's not going to happen, and I'm with them. I don't see a whole lot of likelihood that Brexit will actually come to pass between now and the end of the month. At the minimum, it looks like a 2-month postponement to give the UK time enough to negotiate a 2-year postponement. So we're looking at least 2 years out, and that's if Brexit even ends up happening. The likelihood of Brexit being canceled one way or another between now and the next 2 years is all but certain. It's as close to 100% as is humanly possible. That will boost the pound. So long as nothing throws a wrench into the works, I would expect to see pound strength going back at least into the 140s, perhaps even touching the pre-Brexit high of 150. The yen has weakened significantly against everybody except the CAD and bullion metals. So the yen was a clear loser for the week. New Zealand, the Kiwi, much like the Aussie dollar, have been very sideways, gaining ground and losing ground against different currencies pretty much all week. It was going up, then it was going down, and just didn't do much of anything. And US dollar continues to gain strength against almost everyone except the European currencies. So the dollar lost ground against the pound, the euro, and the Swiss, with the pound being the overall winner, followed by the euro and the Swiss, basically flat, but it did gain some ground against the dollar, especially towards the latter end of the week. So that's what we have for the relative strength meter at this point. And I'll be moving on to our fundamentals for the week. And as we can see, it's going to be a very, very busy week. We have the RBA, the Reserve Bank of Australia's interest rate decision scheduled for tomorrow at 10:30 p.m. I seriously doubt that it's going to happen. That the last two of them have been just wrong scheduling somewhere along the way. So I'll be taking a look at the calendar more closely by noon tomorrow, just to make sure that that is the right date and time. I'm losing a lot of confidence in the Australians or in whoever makes up these calendars. So, but for now, the Aussie interest rate position is scheduled for 10:30 p.m. Eastern time tomorrow. We have nothing much going on Tuesday. Then Wednesday, we pick up with the Bank of Canada interest rate decision at 10. We will definitely be trading that one live. Then Thursday, we have the European interest rate decision at 7:45 a.m. Eastern time, also trading that one live. And of course, we have our favorite Friday, the first Friday of the month, where we have both non-farm payrolls coming out of the U.S. That is a very key fundamental. And we have similar numbers, employment numbers, coming out of Canada at exactly the same time. So we'll be trading both of them. We'll figure out a strategy where we can not be exposed to the dollar, but still trade the CAD, and then similar with the dollar, not be exposed to the CAD, still trade the dollar. So obviously USD CAD is not what we will be trading as a fundamental, but all the other dollar and CAD pairs are up for grabs. So a very busy calendar, pretty much a fundamental every single day of the week except for Tuesday. And of course, we will be issuing our schedule of what time we will be meeting for all these events. Moving on to the charts, we're starting out with oil. I'll wait for the chart to catch up. So we have oil prices, as I mentioned earlier, continuing to rise. We have a nice uptrend that formed the bottom at somewhere around the end of December. And the past couple of weeks have been reasonably flat as it moves sideways towards the trend line, a trend line it has yet to break. Right above a support level, it has also yet to break. So all in all, still a bullish chart. If this continues going up, it will, of course, continue to strengthen the CAD, which had a horrible Friday, but is already seeing a little bit of strength come back to it as the week opened. And the last 5 candles we see in this chart are forming a pattern known as 3 white soldiers, where we have a long bearish candle followed by 3 bullish candles, and all that bookmarked by one final bearish candle. That is technically a bullish pattern on the Japanese candlesticks, and this is a daily chart, so I do give a lot of strength to the patterns here. But anyway, I remain bullish on oil simply because it is above the Ichimoku cloud. It is following a trend line that it has not broken at all, and it is above a significant level of support at this time. Obviously, nothing's set in stone. This could drop all the way to the bottom, but for now, it is in a bullish trend, and that's the way we're going to be playing it. Euro dollar. Euro dollar continues to be a bearish chart with a very strong sideways component. In fact, it has been sideways pretty much since around September of last year, simply bouncing between the two extremes. We have a high in the 115s and a low in the 112s, and it has been bouncing between those two, while at the same time trending lower and lower. It's currently following a downward trend line. It is below the Ichimoku cloud. We're still bearish on this pair, cautiously so, but the direction is still to try to trade it towards the bottom for the long term. Moving on to, sorry guys. Sorry, got a tickle in my throat. Moving on to the pound dollar, we can see the strength that played out over the past couple of weeks as Brexit completely collapsed. And the idea of Brexit itself is probably not going to end up happening, as I deliberated at the top of this call. Friday had a very sharp retrace, but it still bounced off of support and is trending up again as the market opens. Obviously, too soon to tell, but I am at this point, I've reversed my position, my bias. I am now extremely bullish on the pound dollar. As I said, looking for it to go into the 140s and perhaps even beyond. So we're already long on this one, and we will remain that way until this plays out. USD/JPY, another pair that we are currently long on and carrying profit as it breaks above that rather steep trend line that it had abandoned a few weeks back. So we're seeing a very bullish movement to the USD/JPY. We're seeing a lot of yen weakness coming to the market. And of course, the next stop for the USD/JPY is going to be around the 114 area, right at the top of this chart. And indeed, we have a take profit somewhat below that. So we're trying to trade it up as far as it goes towards the upper levels of resistance, bullish chart by any factor you want to measure it with. Moving on to the USD CAD. And again, we had a pretty good week for oil that just collapsed on Friday. So we did take a huge hit on paper on this pair as it retraced. But again, the open of the market already has it sliding back down towards the trend line and towards support. So we're still looking for it to break support on its way down. It's going to be completely dependent on oil price. That's the only thing that is moving this pair right now. So take that under advisement. But we are bullish on oil, which means we are bearish on the USD CAD. It is still trading below the Ichimoku cloud, hasn't come anywhere near it, even with the Friday retrace. So looks to still be a decent short. Of course, the Ichimoku cloud is hitting the trend line a few weeks into the future. So also keep that in mind. But by then, I think this should have pretty much determined what it's going to do way before it hits either trend line or Ichimoku cloud. USD Swiss continues trending down very slowly. We had a spike with the Swiss pairs last week, but all in all, they just went back to where they were, a very sideways week or two, but still with a downward trend, still after a break of the trend line in a bearish movement. And we are short on this pair and essentially at break even right now. We're waiting for that current level of support to be broken and for it to start heading towards the bottom of its range. The range is clearer on a weekly chart. It does have a very established sideways channel. It's very near the top right now. Aussie dollar, this is a pair that I've stayed away from long-term trading. It's definitely been sideways since around the middle of last year. Even though it is following a downward trend line, it has a very strong level of support right around current price. So until that's broken, while I'm still bearish in general on the Aussie dollar, this is just moving too slow for us to bother with. Some of these pairs we will be putting in pending orders. So if we have another sharp spike as we had a month or two back, actually 2 months back. If we have another one of these spikes, we're planning on taking advantage of it and not sitting on the sidelines. So more on that to follow, but for now, we have been avoiding the Aussie dollar for the long term. Kiwi dollar, this one, the complete opposite. It's done a nice recovery. It's following an upward slanting trend line, but it has also not only a sideways component, but a very, very wide one. Lots of volatility on this pair, which isn't conducive to safer trading. So we've been trying to get in and out of short-term trades, not really locking ourselves into a long-term position. And I think we actually took some nice profit on Friday on this one. But long-term for now, until it gets out of that wedge, and it's almost reaching the apex of it, until it gets out of that wedge, we're really not too motivated for any long-term trading. Aussie Canadian, we've shorted this one several times, and I think we've taken profit pretty much every time, though it has not been large profit because the retraces have been brutal. So we've been getting out with a little bit of profit each time. And right now, after Friday, and again, it was a very bad Friday for the CAD, it's gone up all the way back to the trend line. We do plan on re-entering short on this pair once we have or we see a decent opportunity. That might even be as early as tonight. Other than that, nothing much to say. We're still bearish on this pair, and it's obvious why. It's just been bearish movement after bearish movement, and this one has all the likelihood of testing the prior bottom and probably even going a little bit deeper, which is about 400 to 500 pips. So definitely a good opportunity, but we don't want to be faked out by any steep retracements. And with oil price doing what it's doing, this has not been the easiest cat pair to trade. Euro Swiss, we did take a long-term position on the Euro Swiss as it broke that trend line. We are carrying a small amount of profit as of the last time we checked. And of course, we're trying to trade it across that Ichimoku cloud and towards a test of the bottom levels of support. This is a very sideways pair, so it might take a while to play out, might even go all the way back. So we'll be keeping a close eye on it. But for now, we're cautiously bearish on the Euro Swiss. Euro pound, we set this one on ignore last week because both the euro and the pound are in a stranglehold around what's going on with Brexit. Obviously, the pound won the most recent round. But this one can easily go all the way back up, as it could go even deeper, simply because, or stay sideways, simply because both the euro and the pound are vulnerable to whatever happens with Brexit or fails to happen. Euro JPY, finally we have a breakout. It moves away from the bottom of that channel, which did trigger our entry into a long position on the Euro JPY, which is carrying also a small amount of profit. This trade was open towards the end of the week. So we're bullish on this one, also cautiously, but we're looking for it to do a test of the top of the channel, which is about 600 pips away. So quite a decent opportunity, just has to be managed, because this one also has a high level of volatility implicit in both the euro and the yen. Euro Canadian, it was following the channel very nicely. Again, Friday was brutal for the CAD as oil gave up 3 days worth of gains, but already this one too is starting to turn around as the week opens. So we are short on this one. We remain short. The only bullish movement really noteworthy was Friday's. Everything else on this chart has been bearish since around the end of December, when oil prices started to recover. So we'll continue in that trade. Again, managing the trade will be a tricky thing, but what happens in the next 24 or so hours will really be what determines what we're going to be doing with this one. Pound JPY, this was our biggest mover on the pound pairs for last week, as the pound JPY and multiple pound pairs just broke out of the prior levels. We entered at a quarter lot and then quickly doubled up, as it was the fastest moving of the pound pairs, and we are carrying a nice chunk of profit on the open trade. Now it's up to half a lot position, and we're carrying about 75 or so pips of profit. Again, last time I checked. The reason this one is moving quickest of all these pairs is because not only is the pound getting stronger, but the yen is also getting weaker. So it's extremely close to testing the prior levels of resistance around the 149.50, which you see at the top of this chart. And looking at the weekly, if it does pierce that level of resistance, it's got quite a bit of room to go towards the top. So we'll be continuing, very likely, if it continues moving in our favor, we'll probably be adding to that position at least another couple of times as safely as we can to try to maximize the profit we get out of it. Aussie JPY, this is probably the only JPY pair that hasn't really moved. Continues tracking the bottom of that daily channel, and we continue ignoring it. That said, it is starting to creep up a trend line, and is getting very close to testing that trend line from a sideways price action perspective. So we'll wait and see what happens there. This one might be a slow mover, and we actually get some bang for our buck if we're a little bit patient. There is about 300 pips in that channel that could be taken if we do see it start to cross. Euro New Zealand, we're out of the Euro New Zealand right now. It did do a sharp retrace. Again, the volatility on both the Aussie and Kiwi pairs was brutal last week. While it has broken out of the trend line, it hasn't done so decisively. And I'm pretty much certain that this one will drop again to its immediately prior lows of February, but we have to be careful with this one. It's in a very, very dodgy point from both a technical and a fundamental. So we're going to be keeping an eye on it, but it's not going to be our first choice for. We may take a 1 week or 2 week vacation on the Euro. Pound Canadian, again, we re-entered this one late last week on CAD weakness. And we have 2 CAD trades open towards CAD strength, and this third one open towards CAD weakness. And even if the CAD does get stronger, if the pound gets stronger at a faster rate, this one will still be producing profit. as the other two come back to us. So it's both a hedge as well as a little bit of a common sense approach. We can see that it is making higher highs. It broke a prior high last week, and well, it's still moving. It's carrying a nice chunk of profit as we speak, and even the Friday retrace didn't affect this one too much. It's still pretty much trading at a new high as we speak, and it did end Friday at a high point. So with the pound JPY and the pound CAD are probably our better looking trades right now in the open category. Pound Swiss also open trade and essentially a break even. We see that the last couple of days, the pound Swiss did do a retrace, but it did not pierce the prior level of support. So we're still definitely in a bullish breakout with a bit of a retrace on Friday. So we'll have to see what the weekends are bringing us as it kicks off. I will be, if any of these start going too backwards, I will be pruning them and simply doubling up on the ones that are producing profit. That will be a better use of equity than anything else. That is the end of our charts. And looking into the setups in progress, we continue seeing that the dollar pairs are still gaining strength. I'm going to say still gaining strength. A little bit of a slower rate of strengthening than before. And there's a lot of stuff happening both in the fundamentals as well as some of the technical areas of support resistance that are slowing down the dollar. I'm not going to say that the dollar is going to crash anytime soon. It'll crash when it's ready to crash. But what I will say is that the dollar remains overvalued, but it's still gaining value, even though, as I said, less than stellar news and less than stellar outlook. But I would not be shorting it until I get a much clearer signal. And indeed, I may be in dollar strength trades until that happens. The euro pairs, the euro is still looking for a firm direction. It's very wavy, and it depends on which pair we're looking at. And of course, it is exposed to Brexit in not as large a fashion as the pound, but still, Europe is going to be strongly affected by Brexit, no matter which way it ends up playing out. The pound, of course, seems to have come in from the cold, as Brexit actually happening at all is in serious doubt. So I am bullish for the first time on the pound probably since 2016, and there is a lot of room for bullishness to come back so long as nothing Brexit related suddenly does a turnaround. So you got to be careful with these. You got to protect profit when you can. But for now, we're bullish on the pound. Aussie, New Zealand, both currencies are experiencing high volatility and lack of sustained directionality. What does that mean? They're in consolidation, but they're moving in opposite directions. We've seen the pound get stronger as the Kiwi weakens and vice versa. They're no longer tight at the hip. They'll come back to being Siamese brothers, but right now they are in a little bit of disarray, moving sideways, very high volatility as they go up 200 and drop 200 pips within days, sometimes within hours. So good opportunities for short-term trading. Not too convinced that I'll be opening long-term trades on either one of these currencies. And last but not least, the CAD, oil yo-yoing, has the CAD doing the same thing. Last week started strong and ended in a rout, as I said. Bearish candle on the first day, 3 recovery days that brought it all the way back to the top, and then on the 5th day it crashed again. So all in all, oil is still trending up, as we saw on the longer term chart. And so long as that doesn't change, so long as it doesn't break the trend line or break the level of support it's currently right above, the CAD will continue getting stronger, and we'll continue trying to trade that for profit as much as we can. That is the end of our presentation for this week. Parting words, it's going to be a week heavy in fundamentals. So the short-term trading is going to be very dicey. multiple interest rate decisions, the continuing Brexit talks, oil price yo-yoing, and the non-farm payroll as the cherry on top of the sundae for the end of the week. So the long-term views need to be looked at far beyond the week, which again, long-term, we're looking at things that are going to play out in months and not necessarily in days. And our short-term views, however, need to be really short. We're probably not going to be entering directional trades that are trying to outlast a week, whether they be 50 or 100 pip gains. We're going to be doing a lot of short-term trading, if at all, very short-term, so scalping in essence. And of course, our real short-term opportunities are going to be the 4 or 5 fundamentals that are scheduled for the week. And that is the end of my spiel tonight. So anybody with any comments or questions, feel free to unmute yourselves and let me have it. Okay, then in that case, thank you very much for your time. We will be sending our regular email summary and YouTube video recording of this session, and we will see you again tomorrow. Have a good one.